Welcome everyone. It's Tuesday. It's June 21st. I was just watching Inferno with Tom Hanks and the girl from Rogue One, Felicity Jones. And I was watching it last night with my wife, and we were sitting there watching it together, and he wakes up out of the fog and he goes, um, what day is it? And she's like, it's Monday, June 20th. And I was like, whoa, it's Tuesday, June 20th, while we were watching that. That's actually not really germane or important to today's webinar, but I just thought that was interesting. Nice to see you here. It's Wednesday, not Tuesday. Nice to see you here. Hi, Bob. Hi, Peter. Hi, Kevin and Andy and everyone else. Welcome to those of you that are joining us live and to those of you that are watching the recording. Remember, you can always get the recording on YouTube and on Facebook, and we send those links out on Telegram Messenger. You can get real-time alerts. If you click on the link inside the chat box right now on Telegraph, you can see a little page with instructions on how to get real-time alerts on your phone and on your computer. We'll alert you when the webinar is about to begin, when we have a last-minute cancellation, when the recordings are up, and trade ideas and so much more. Nice to see you here. Let's talk about something that's near and dear to my heart and has been on my mind, and that is the question of whether a crash is coming. It's always difficult, dare I say impossible, to predict a crash in the financial markets. And as my friend Brian Shannon of alphatrends.net is famous for saying, only price pays. You follow price or you get stung and you get hurt. This is the S&P E-mini futures daily chart. It's a rocket ship. It just goes up and up and up, and it goes down briefly for short periods of time, and then it continues to go up. But the time is shortly coming, I believe, for a variety of reasons, where we will have some kind of significant correction. And what I'd like to do is switch over here to my notepad. Here are some evidences, some pieces of evidence about a crash. Number one, I feel it in my bones. This is not a valid reason. So I'm going to put an asterisk here. This is not a good reason to take a trade. But I do feel it in my bones, and a couple of times a year, I get a feeling about a trade, and it's all I can say. It's just I have no other evidence to support it. Second of all, there's a tiny Nashville, and I believe that this is a divergence. Well, there's a divergence in a variety of places, but one is on the 60-minute chart, and I'll show that to you in a moment. 3, the US dollar, Japanese yen is topped out. I'll show you that in a moment. Fourth, we have some long-term support and resistance levels that I want to take a look at. And fifth, which brings us back to full circle, and it's circumstantial evidence, not direct evidence, Uber is going down in flames. Many times last year and the year before, I speculated that the market would top out when Uber began having significant difficulties. Uber is not a $68 billion company. At the most, Uber is a $10 billion company, and Uber has all kinds of management problems, and they're basically running a company now without the executive suite. This is the topic of tomorrow's podcast, and you can hear more about it then. But I think this is a really fat canary in the coal mine. I think when Uber goes down, the rest of the market comes down with it, because Uber is sort of the poster child for the brand new demand anything from your phone economy. And the next generation of mobile economics is going to come from artificial intelligence. This latest version of mobile economics came from just replicating what you could do in the real world on your phone, and get a taxi, demand a massage, or whatever it is, like all that kind of stuff. And this is going down in flames. Like, this phase has to get washed out. This phase has to get cleaned out. When Blue Apron is thinking about going public, you know that something is wrong. So those are my evidences, and I want to walk through each one of those things on the charts right now. Now, it's not a guarantee, and I'm not asking you to make any trades based on this, but I do think it's important to note. If you're just joining me now, welcome to the webinar. This is daily, Monday through Thursday anyway. We'll go for 5 to 15 minutes, and I'll post the recording on YouTube and Facebook, and we'll make sure that you get a copy of that, or that you are alerted to where that is. Remember to click the link in the chat box. It is the instructions on how to get real-time alerts so that you can know when the webinar is about to begin, and so forth. Let me walk you through a few things. This is the 60-minute S&P E-mini futures chart. This is tiny Nashville. That is a small, very small Knoxville divergence indicator. And this can occur on Japanese yen pairs and the stock market at huge points of reversal. And if the highs are broken, if the market moves back above the highs, then that negates this theory, and we wait for something like this to happen again. However, if the market continues to make lower lows, if it rolls over and makes a low, and if this daily pivot is missed, if we finish the day lower than this daily pivot, lower than 2441, which is no small accomplishment given the fact that this stock market has just simply run up over and over and over again. If all of these things occur, then I think we are in the early stages of a more significant correction. And I think, once again, the fact that Uber is in the midst of a significant turmoil drags the rest of the venture capital world down, the rest of the investment world down. It's bad news when the most valuable private company of the last couple of years is failing miserably in its management. Okay, I don't want to harp on that too long. I want to show you the daily chart. The daily chart has no divergence, and it doesn't look like the trend is reversing. The price is above the trend line. Price is making higher highs and higher lows. There's no indication from a daily chart perspective that anything is going on. However, if we switch to a weekly chart, the picture changes. We have bearish divergence on the weekly chart, which is not a guarantee of a reversal, as you can see right here. Usually on the stock market and on the Japanese yen, the first set of divergences, I don't like to say false signal, but I do want to say doesn't work, and it takes a while to complete. This is what I call a roll, or the market rolling over. And I call it that because of the shape, it's rolling over. But I also call it because if you shorted the market here, you're adding to the trade here, you're rolling over your trade, or you're buying new sets of puts, or you're buying a new put spread, or whatever it is here. Anyway, that's what the market did over here. Now, when the market finally tops out, or if it ever does, ever, it looks more like this, and then it starts to fall. We have in our favor some other evidences. We have massive numbers of weekly pivots in green, monthly pivots in red, and daily pivots in blue. There are massive numbers of missed pivots on this chart. The market cannot unsustainably rise forever. It doesn't happen. It has corrections. And these corrections generally will retrace 30% of the most recent move. So let's just, I hate fibs just as much as some of you love them, but let's just do it. I'll make this chart bigger and we can take a look at where this lines up. Yeah, this is a cluster in a lot of senses of the word. There it is, 2289. It's a cluster of missed pivots and also the 38%. The 23% is a cluster of pivots and is also at 2351. All right, that's not all the evidence we have, however. We also have some evidence on the US dollar Japanese yen. The US dollar Japanese yen recently touched a monthly missed pivot. It retraced to touch it, and then it dropped from there. I think this is significant that it hit it exactly and then it dropped back. What I would really like to see here is a move below the lows so far in this week. Some of these levels here. And if we break below those levels, that's, once again, that's an indication that the market is correcting. 1 down, 2 up, 3 down, 4 up, 5 down to the trend line again. Something like that would be interesting. Also, this is a shoulder. This is a head. This is a shoulder. This is the neckline. We break below this neckline, and we are going to fall this entire distance. I hope you're liking this analysis. This is really enjoyable for me. And we could expect this to drop as far as 102, 103. Is that good so far? Are you enjoying that so far? Then we have some long-term support and resistance, but we're going to look at that tomorrow. I'm not going to focus on that today because that's going to take me a while to draw it. And then we'll go from there. All right. That's about it for today. That's all the stuff I have for today. Why don't we just take a quick look over here at the Euro Turkish lira on our 3 p.m. Madrid trade. So it's about 3 o'clock in the afternoon in Madrid, and the trend has been down so far today. So what I would do is, if you are open to the idea of trading volatile exotic currencies, that range is just gigantic. There's no way we would. Okay, if you're open to the idea of trading an exotic currency, what you would wait is for this to roll over in two different ways. You want to see the Euro Turkish lira jump up a bit more. You want to see it go overbought on the stochastic, although I doubt that it will get there. It's also okay if it just rolls over here and the stochastic lines cross as it falls down lower and prints some bearish candles. That would be a sell trade for today. My guess is that this doesn't even have the strength to rise as high as the midline of this channel. I'm not even sure that this channel is where I would want to put it. It probably doesn't even have the strength to get that high. We're probably going to roll over sooner than that. Also, if it breaks below the lows right here, I would consider taking that trade. Many of you have heard that the British pound US dollar, Theresa May took out some lines from some speech by the Queen or some crap like that. And the British pound just jumped up. I don't think it's the Queen's thing. I think that there was some news that the Bank of England stands ready to raise interest rates given the fact that the economy is doing all right. And I think there's the same possibility on the British pound as you have on the Euro Turkish lira. You're going to wait for a dip and then a buy with that trend for the day. You could also just trade it. You could buy it on a break of the highs. We'll take a look at, well, I don't know if we'll take a look at this tomorrow. I don't know if we'll even follow up ever on anything I talk about in these webinars. If you like the webinars, don't forget, subscribe here on YouTube if you're watching it on YouTube or you watch the recording on YouTube. Like my page on Facebook. I'd really appreciate that. That helps me out a lot. And it's just a small kindness that you could do for me, if that's all right. I really appreciate it. Thanks so much for joining me. We'll see you again tomorrow.